Yeah, there has been a movement to understand this at the political level and at the policymaker level, certainly on the Hill in Congress, where we do have some bills that are getting close to markup. The Stablecoin Transparency Act is the most interesting piece of legislature out there right now because it has bipartisan support in a very partisan market. And so we have the midterm elections in just over a week on the 8th, and we think that that bill will start to march its way into law after that midterm election occurs. And that just deals with stablecoin around US dollar. And so it'll be companies that are willing to go through the process of getting regulated that use the US dollar as the backup to their token. And USDC would be a good example of that. The reason it's got bipartisan support and the reason there's so much interest in it on both sides of the aisles is it makes the US dollar by default as a payment system the world's default currency. Now, right now, the US dollar is used for energy. Obviously, a barrel of oil is traded in US dollars, but this changes the game. Yeah, you have that. However, I'd argue that this 75 basis point hike, which is 100% certain, is completely baked into all markets, the equity markets, the debt markets, the crypto markets. It's in there. What is not resolved yet, which everybody is waiting for, is what is the terminal rate the Fed is going to actually slow rate hikes or stop them altogether. And the reason there's optimism on that is you've seen the Canadians do this. They were supposed to raise 75 basis points. They only raised 50. And then the British are making noise about this. The Swiss, the French, other markets are starting to say, wait a second, we're going to slow down the pace of hikes. Now, the Fed has not jawboned that at all yet. However, the market is making the assumption that if every other economy is doing it, it's just a matter of time before the Fed does the same thing. And if we end up at a terminal rate of, let's say, 4.8, 4.9, or under 5%, that's still a historically very low rate. Now, it has rocked some markets. Housing is a good example. And, housing mortgages now are 7% for 30 years and higher. Well, let's take that question in two parts. Let's deal with crypto first, all right? And then we'll talk about the stock market. We can even talk about the bond market. I play in all three of them. The crypto market right now is really interesting, and here's why. This is one of the first years where everybody that trades crypto knows they're going to have to report. Let's say you're trading domestically in the US. You're going to have to report your gains or losses. And let's say you're like me and you have a lot of positions on. You've got 32 plus positions. Many of them are way underwater, but I don't want to give up my exposure to crypto. So what's going on my trading desk in our operating company right now is we're looking at every single project we're involved in. We're looking at the loss we could harvest. In other words, if I'm down 70% in helium or something, maybe I take that position, go back to USDC, then trade it into Bitcoin for the next 31 days, because that's the wash period, or 60 days, depending whatever your wash period is based on what your institution compliance says or you individually have to comply to. Policy. The number one issue around crypto right now is policy. Number two issue, policy. Number three issue, policy. And I'll tell you why I say that. I represent and am very close to the indexing markets. I do indexes for sovereign wealth, pension, hedge funds, universities, endowments, all that. Let's say you're a very oil wealthy emirate in the United Arab Emirates and you make 250 million US dollars a day. That's not uncommon. Where do you put it? You put it into the S&P, X oil stocks, X airlines, because you already own those. And so indexers like me make those indices. When I talk to those people about what they're going to do in crypto, they would love to index 1 to 3%. I asked them, well, what would you want in that? They said, we'll just do Bitcoin. It's so correlated to all projects. We'll just do 1 to 3% in Bitcoin. They don't own any yet. None. Zero. For all the excitement about crypto, the real money, where 70% of the world's wealth is tied up in sovereign wealth and pension plans, owns zero crypto. If they could get their hands on it, they would buy Bitcoin, which is why it's so interesting. The Canadians have an ETF where the underlying is Bitcoin. They also have an ETF. But let's talk about what you brought up there with Bitcoin miners, because the worst has not yet happened. Many of these miners got into contracts where they couldn't fund the purchase of stacks, machines. And so what they did when Bitcoin was up at $25,000 to $30,000 is agreed with contracts saying, if you lend me the machines, I'll pay you back on the awards with a floor of 25,000 or a floor of 27,000. Guaranteeing a Bitcoin price is an idiot manager. And so what happened there was now they're sitting with these contracts. They've got the stacks. They're being awarded coins, but they have to give them up at a price that's 20, 30, 40% higher than what Bitcoin's trading at. So they're effectively, every time they get awarded, on their way to bankruptcy. So you're going to see a lot of this happen, a lot of machines coming on the market. The prices have come way down on Bitmains and everything else. And we've got to flush out the idiot managers out of mining as well. And the other problem you got with mining is Larry Fink and the ESG mandates around just tying miners to the grid. Well, I'll tell you my journey. The United Arab Emirates and Saudi Arabia are two different markets, obviously. But when you look at the Emirates, Abu Dhabi, that is been awarded now for over 5 years, the safest city on earth. It's an incredible place. The rulers there are very advanced in their thinking. 50% of the management of the country are women. I've been very successful investing in women over the last 14 years. That's where I've made 75% of my returns. So that was very intriguing for me. But when I went and met with the ADGM, which is the regulator there, started to look at that market, because it's one of the fastest growing markets in the world. People really misunderstand the Middle East. It's booming. It's absolutely booming, and it's growing faster than anything we've got in North America. So in order to be able to work in the financial services market, it's much easier if you can be awarded a citizenship. You're 100% right. Financial services and a compliant platform out of Abu Dhabi is the goal, because that could become effectively the Paris of the Middle East. I mean, it'll become the London of the Middle East, whatever analogy you want to draw. It is very pro-business, very low regulations. All they want is compliance with the countries they do business with. So the UAE is not going to be rogue on crypto, because they do so much business with the United States and the SEC. So they're waiting for policy. You know, if you look at what happened with the SEC and the OSC, here's a case study, a use case we should think about. The OSC is the equivalent of the SEC, except in Canada. The Canadians were the first to award a broker-dealer attached to a crypto exchange in the world. They did it in Ontario, and they made it compliant. So every Canadian citizen can open an account and buy Bitcoin in a compliant fashion in every province. Now, that order was generated by the OSC under the auspices, one assumes, of the SEC. Well, let me tell you what it looks like. Step one in 2023, bipartisan bill legalizing and regulating stablecoins backed by the US dollar and treasury bills. 100% that's going to happen. I may get the timing wrong by a few months, but the reason that would happen is in the economic warfare we're getting involved with in China, where the Chinese are trying to digitize their currency. I would never own that currency. I would never trade it. I would never even put it on my blotter, ever. I would never do anything with that. I need something that is backed the faith of the US dollar and regulated. And that would be a stable coin that's audited every 30 days, that has either one-to-one with the US dollar, or any treasury bills in it are a duration less than 12 months. That's what the act says. It's a very simple act. If that happened, you could see USDC, like Circle, for example, wouldn't be the only one, but that would become a very powerful platform for everybody all around the world. More transparent, much faster, lower cost, completely efficient and productive. They are. And that's why there's so much discussion. If you're in the financial sector, which is one of the 11 sectors of the S&P, you've got every lobbyist and their dog in Washington trying to slow down this transaction, because at the end of the day, they threaten your profit margins. It doesn't mean it wipes out money center banks. That's not going to happen. They'll adopt crypto. They'll start putting it on their trading desk. They'll be part of that sectoral move. But the actual efficiency and productivity of blockchain and what's going on digital and cryptocurrencies is very, very productive. And so you can definitely see it over the next decade become the 12th sector, the S&P, servicing all 11 sectors. I mean, if I'm doing a real estate transaction in Switzerland, I'm not sending over US dollars to the ACH system. That takes 3 days and costs a fortune. I'd rather just transfer it in less than 1 second on some very high-speed chain, maybe Miston or whatever emerges as the high-speed chain. It won't be Ethereum in my view, but that doesn't matter. Whatever the productivity is,